Well, I think it's that time, folks. We're in Q4. We're just coming up on Halloween. Christmas, Thanksgiving will be here before we know it. Then, of course, the new year. So I thought it'd be fun to look out into the future a little bit with our broken crystal ball, talk about stock market, real estate, economy, post-election. Where do we see the economy going? Taylor, what do you think? Post-election, inauguration, we're in 2025. Are you feeling good? Right? Is the economy going to hit a recession? What do you think in 2025 looks like?
I think we're broadly speaking slowing. I don't think that we're in like this hyper slowdown mode where a nasty recession's coming. But we are at a point of influx right now. The information that came out last Friday with the jobs report surprised me. It really did. I didn't expect there to be like a nasty bad number, but I didn't anticipate seeing this massive surprise on the upside. And you can question it to the cows come home, and I do too. Don't get me wrong, but we got to play with the data that's given to us.
Yeah.
So, I mean, you can conjure up what you think it should be. Doesn't matter. The market reacts one way. What that number comes out at, you got to kind of stay up to date on that. So, I guess I would have said a more kind of glaring is not the right word, but I would have given a more negative depiction. But I think it's still slowing more broadly. The Fed has raised rates. I think there's lagged impacts that haven't necessarily fully taken hold. And I think that you're going to kind of continue to see a small slowdown.
And I think when I look at next year, the number I feel best about is inflation. Right? When you look at how inflation is calculated, the rolling 12 months, the base effect, all of that, I think by April, May, June, we're going to definitely have a one handle on CPI headline. So I think inflation, I think the battle is going to be over. Now this is clearly a hope of mine, right? Because who knows? We could do something wild and inflation take off again. Not currently what I'm calling, right? I think we hopefully we've killed it. But I think inflation's good. It's going to be with a one handle by April, May, June. I think growth, again, if you believe the numbers, right? I think GDP now is 2.9,
Yep.
3%, something like that.
Yep.
Historically speaking, we'd have been really happy with that.
That's right on course. That's
Yeah.
broad long-term average right there.
Yeah. Uh I just it just feels to me that the rolling recession is going to really start hitting people. Because I think to our point earlier about the market, I think we're going to see travel, leisure, we're going to see restaurants pull back, and yeah, I think the business cycle's undefeated, right? This whole soft landing, you know, everybody calls it a soft landing until it's a hard landing, right?
Right.
Right.
That's
So,
exactly right. I do think that when you talk about inflation, inflation is the one that everyone feels most comfortable with.
mhm.
And
Which is
that
probably a
does
problem. It's probably
I was gonna
yeah,
say that scares me a little bit there, right? The Fed has literally professed victory. They've taken a victory
right.
lap on inflation. They're like, hey, we're not worried about that. We'll cut. Let's go. It's the jobs number that are more concerning to us. So it yeah. But I mean, to your point, the trend is undoubtedly downward. We get CPI later this week. It'll be interesting to see what that number comes in at. Kind of low twos is what
Mhm.
the expectation is there. And to your point, at some point, inflation stops going down because inflation doesn't go negative.
Yeah,
So
exactly.
like,
It
we're
just
talking
yeah,
about ones like that's been the long. Well, it is interesting if you look back pre-COVID. Um, we literally had rates pegged at zero because we couldn't get inflation up high enough. We couldn't get it
right.
to 2%.
I
Sounds
remember.
like the world's greatest problem, right?
Yeah, exactly, exactly. And then, the other thing I think about is the jobs number, right? Again, unemployment did tick down to 4.2. I thought the number when they gave us their SOP, right? The Fed did their whole dot plot thing.
Yep.
The
Yep.
one number that made me chuckle was how the unemployment rate was going to go up to 4.4 and then just magically stay flat. I'm like,
Yep. Yep. That doesn't
how does
happen.
how does that happen?
It was going to magically go up to 4.4, stay flat, and then chug downwards slightly a couple
Yeah,
years out. And I did a video on this too, just saying like, listen, the unemployment number doesn't stay flat. Typically, my fear, admittedly, was that we were kind of going through this unemployment number that was ticking up, ticking up, ticking up. and then at some point it would snap.
Mm.
It's now shown 2 months in a row where it's trended back downwards. It went 4.3, 4.2, 4.1, and that is welcoming. I mean, again, you may say, "Hey, that's only 2 months." That's almost a quarter of the year at the same time.
That's a
So
certainly a trend, right? You reverse the
yeah,
trend. That's you
yeah,
can't ignore that. And then I think about, real estate. Real estate's still a broken housing market. I don't know if you saw this. I don't know if it hit your radar, but now we have experts talking about the turnover rate being the lowest in the last 30 years. I'm like, no kidding, guys. I told you that a year ago. The numbers from memory: 25 homes out of 1,000 turnover. Where historically speaking, it's more like 40 or 45.
okay.
It's just people are not moving. So we're,
So they're down
we've
40% somewhere in that ballpark. Yeah,
exactly. So we have transactions, existing home sales below 3.9. I don't. I think. I guess the last thing to talk about here is rates, mortgage rates specifically. I don't
yep,
think we get below 5.8 all of next year.
yeah. And we weren't too far off that a month ago, right?
Yeah, we are at 6.1. 6.11 is the low read.
Six one one, and then the Fed cut 50, and
And
rates
then we go
rates
up.
yeah, rates went up. Yeah, the market said, listen, listen, if the Fed's going to cut, that's going to leave room for future inflation more so than what we had already anticipated. And so that's what drives the longer end of the curve, which is what drives interest rates. So yeah, it's I so we're at 6.5, 6.6 now.
Yeah, call it six
Um
six.
on mortgages. So 5.8 is 0.8% getting shaved off of that. I think what we're seeing right now is we basically just saw the lower bound, and I think we're getting somewhere near the upper bound of where rates will be. I think we're kind of in a kind of a range, and we just we snapped lower, and now we've snapped back higher. And I think probably things got overcooked on the low end a little bit, and things are going to get overcooked on the high end. I think we have a little bit more upward pressure to come before things kind of back off. 4% does seem to be kind of a fair rate. I think probably we'll settle in a little below that on
Yes.
the 10 year,
Four,
and then
four,
that's what
yeah,
will drive.
10-year. Yeah,
Yeah.
4%. He's not calling for 4% mortgage rates. He's not
No,
calling
no,
for that.
sorry, sorry, sorry.
Yeah. No.
I'm in my
They're all
nerd terms over here.
Yeah, exactly, exactly. Because I think that's important. In order for the housing market to heal itself, we just need more wage growth. We need prices to stay flat. All of those things. Um,
And
how about
you
this?
have gotten you have
Go ahead.
gotten a little bit more broadening of the spread too,
Yeah,
just
yeah.
recently. So you've gotten an increase of mortgages. I'm going to rough this out. You might know better than me. Of 70 basis points, where the 10 years move 50 basis points.
Mhm.
So you've gotten a broader spread there. But again, anytime you have a pressure that hits the market kind of out of nowhere, where it says, "Oh no, this could be inflationary," boom, they're going to build in a broader spread because that's the bank building in their buffer of
Margin.
risk.
Yep, exactly. It's going to be really interesting to see. Again, I don't see any kind of cataclysmic crash in an economy next year. I think, you know, sub 2% growth. Again, it could be the rolling recession, which again, we don't really know what that feels like because we haven't been through one, certainly not one this long. But yeah, I think 2025 is going to be interesting, specifically for commercial real estate. I think there's going to be a lot of come to Jesus transactions. I think there was a lot of extend and pretend. I think that's over. You eventually got to take your medicine, and I think 2025 is going to be the year for commercial real estate to take it on the chin.
Yeah, and you started to see that get priced in over the past couple of years, but then you had rates come down and the real estate space got a little reprieve, and especially like real estate stocks, REITs
Mhm.
ripped for a short period of time. Now they're starting to
Yeah.
realize that like, okay,
Whoops.
maybe that's not going that way anymore. I am curious to hear it, and I know this is such a hard question to answer because
Sure.
especially on the residential side, it's hyper local. But if you had to broadly speak to just direction of real estate prices, not real
Mm.
estate transactions, which I know you
Mm.
talk a lot about, prices, are they flat? Are they up? Are they down?
Yeah, so we can use Case Shiller just to put something on it. I think I think 2025 is going to be very much like 2024 when you look at it on a 12-month chart. It'll be plus or minus 1%. I
Yep.
really think we got all of our appreciation in 2.5 years. If
Yeah.
you look at real estate over decades, which I have, and I have this 54-year spreadsheet, we got all the appreciation in two and a half
Yeah.
years. You're not
Yeah.
getting any more. It's just
Yeah.
flat.
Yeah.
You're done.
Yeah. Yeah, from what I have looked at, 5.4% year-on-year growth is roughly what residential. Are you on board with that number or right about there?
Yeah, historic. Yes, like historical averages. Yeah,
Yeah. Yeah.
yeah, yeah.
Yeah. Well, when you get 40% in 3 years or whatever the number is, yeah, there's some that and it doesn't mean you have to give it back, right?
Oh,
That's
just
that's the other point
you.
about the stock market right now is people,
Yeah,
you talk
you
about, hey,
grow
we've
into it.
seen like this
Yeah.
massive run, and it's like, all right, well, that doesn't mean things have to fall off a shelf. They can,
No,
and it re-racks and gets rebalanced real quickly, or you have stocks move sideways and earnings just grow up into it.
there you go. There you go. This is a lot of fun.
We
2025 is
just
going to be
solved all the
here.
world's problems right here. Oh,
Oh man,
yikes.
this you're amazing, man. Take care of yourself. Where can people find you?
Yeah, find us at LifeGoal Investments. We're on both Instagram and on TikTok.
Thank you, buddy.
Thank you.